So this is going to be my last video about the basic components of insurance premium. We talked about expenses and losses, and today I'm going to talk a little bit about profit. And this is a pretty easy topic to cover because, we don't like to think about necessarily large corporations making money off of us essentially, but there's always got to be a profit motive for every business. If they didn't make money, then they wouldn't have a reason to exist. And the same is true for insurance companies. They provide a service, you transfer risk to them and they will pay your claims. And as part of that, you agree that they're going to make a margin. And the margin in insurance tends to be pretty low as a percentage, less than 10%, I would say on average, maybe 5%. And so that's not a ton of profit motive, I guess, as a percentage, even though the dollar figures do tend to be pretty large because of the nature of the size of the market. But, this additional series here is about how you can leverage profit. And for larger organizations, you can leverage knowing that profit is in there. And if your premiums are high enough, it might be worth a conversation to actually become your own little insurance company. And that's called a captive insurance arrangement. And generally, these are going to be for workers' comp, general liability, and auto lines of business. So if you have a couple $100,000, say a minimum for this is going to be $200,000 of premium in these areas, then we can have a conversation about leveraging profit for your organization via a captive insurance arrangement. And like I said, that is going to, again, leverage that for your organization. And it's also going to leverage the losses and risk management for your organization too, because if you have a good loss year, your premiums can get returned to you. So it's not a guaranteed cost program. So you got to have an entrepreneurial spirit essentially to get into a captive plan for your insurance. But if you're in business, chances are you've got a pretty entrepreneurial spirit as it is anyway. And, it's at least worth the conversation. So all insurance companies make a profit. And I know there used to be mutual insurance companies that would return additional premiums to all of their policyholders. And those still exist more on the life insurance side, but for property and casualty, which is my main focus, there's not really, even though they call themselves mutuals, they've been structurally rearranged so that those dividends don't necessarily go to like a frontline auto insurance policyholder or something along those lines. And there are some workers' comp plans where you can get a dividend. Again, that is more leveraging, your losses with your risk management. But, if you really want to leverage the profit associated with your insurance plan, it's worth it to have that captive insurance arrangement conversation as long as you're at least at $200,000 combined of these premiums. So I hope you enjoyed this series. If there's any insurance questions that you have that you'd like answered, hit me up. Thanks a lot. We'll talk soon.